Hi, and welcome to another daily recap. So today I'm going to recap the 114 and it's October 14, 2024, and it's Monday. So to give you an overview of what happened today, that there is no trades on both EU as well as GU. So yeah, actually price went in my direction and as I expected, but there was no pullback towards CPY to take the trade. So that's why there is no trades today in both EU as well as CU. So let's jump into the board and see what happened on this day. So let me take a pen. So in the euro dollar, the daily is bullish and the internal is bearish, and the price reached the daily demand zone. So now the price can, and we can see that there is strong rejections coming off the daily demand zone, which means the demand is gaining control, but still the the supply is in control and the price is moving down. So I can expect that the price can push up to tap into this supply and take some buy side liquidity before pushing down to take this sell side liquidity because this is all these all inside work candles, right? So that's what I expected. So what I can expect is a bullish momentum and then followed by bearish push. So that's what I expected. So that's why my daily bias was bullish to because the price mitigated the daily demand zone and you know that the price moves from supply to demand and demand to supply, right? So from that perspective, if you see the price has mitigated the daily demand, now the price can move up to mitigate the daily supply. So that's why daily mitigation, and there is a demand to supply flip above. So this is a demand to supply flip because it has flipped this demand zone. So moving on to the this is the zoomed in version with some annotations. Price is in the daily demand zone where the next higher low can be formed. Thus, I need to wait for the lower time frame confirmations before taking shorts, obviously. But currently, I can expect the price to be bullish to take some buy side liquidity. That's what I just explained now. This is the 4 hour chart. The swing structure is bearish. The internal is also bearish. And price is kind of a messier. It's not clear. It's not perfect like this one. You can see the price. It's perfect here. You can see the pullbacks, run, pullback, run, pullback, run, pullback. But here you can see it's messy. So this is not the best of the price action that I am can rely with. But still, we can identify the liquidity pools and then target those liquidity pools using the low time frames. So what I expected in the daily is the price has mitigated the daily demand, and now I can expect the price to push up to mitigate the daily supply. So that's what my expectation was in daily. And the 4 hour can also play out like the daily because there is a perfect equal lows form in the 4 hour, which the price can be magnetized towards, and then it can take all these, a buy sell liquidity, and then it can push down to take out the weak internal. So that's can happen, or otherwise, I can say like this low failed to take out this high, and this low is obviously weak, and price can just come down today and then take out this sell side liquidity. It's as simple as that. So to keep it simple, I can say that the price has mitigated the 4 hour supply. We can now move down, take out the weak internal low. Here is the here is the 4 hour supply mitigation. But I must also keep in mind that the price can move up to take out the equal highs and unmitigated daily supply before pushing down to take out the fractal low. So there is some complications. That's why my bias in the 4 hour is a bit neutral. This is H1 chart, and yeah, here we go. The swing structure is bullish. The swing structure is bearish. The internal is bullish. This is not bearish. This is actually bullish. Internal is bullish. Sorry, internal is actually bearish because the price again, made a bearish I box down. So the internal is bearish, which means that the price is in phase A, which is the high probability phase. So for longs, I must see a bullish strip zone, but I must manage my risk before the price reaches the H1 POI. For long, the longs are valid as there is high time frame buy sell liquidity which can be targeted. I know this is phase A, high probability phase for shorts, but still there is some high time frame liquidity pool. So price can target that first, and then it can follow the phase A. It can go down following the phase A to take out the weak swing low. So for shorts, I must see the price go up, make some bearish chalk, and then I can follow this. You know, uh, from this resting form POI, I can look for shorts to target the weak swing low. So that's an option. So let's see what happened on this day. So at age 16, price made a bearish. You know, price took out the Asian eyes, and during the phase A, that's and during the first leg of the phase A, we can't expect the price to go all the way up to make a deeper mitigation in the pullback because price would be in a hurry to come down, take out the weak swing low. So this buy side liquidity sweep is much more sufficient for me uh, to take the phase A shorts if the price makes a bearish chop, and this would be the fresh POI. Then I can look for shorts from here. So very simple analysis, very simple, and if it happens, it would be very clean. And yeah, it happened, and the price took the buy side liquidity, and then it chopped bearish. Now it's very much high probability to look for shorts. I can ignore this demand because it's not valid, because it's counter internal counter fractal, and there is nothing this demand can do other than being getting flipped. So I can just follow the supply chain and then target the weak swing low. It's very simple, and it's very simple analysis and very simple trade. So at 12:11, the price actually made a bearish chop during the New York Open. Now, what are the phase A conditions? High time frame must be supported in the idea. Uh, High time frame is saying that there is buy sell liquidity pool above, so there is not much support from the high time frame, but the other three criteria is met. So the medium time frame POI as 4 out of 5 criteria met, yes, and it is in line with the medium time frame order flow, and it's in OT, which means that this is just the first leg form. So high probability that the price will not consolidate. So what are the POI criteria? It has swept liquidity, it has displacement, interior parallel gaps, and it has been shifting the order flow, and it is unmitigated still, and that's it. And also it is formed during the kill zones. So POI 5 out of 8 criteria met, which is more than enough for me to label it as a put POI. And what are the other confluences? It has swept the AGNI, and the supply chain is being respected, and it has a time-based liquidity to be targeted. That is Asian low and the previous week's low, and it has a structural liquidity to target, that is the H1 swing low, and it has a positive DXY positive SMT with DXY. And one more thing is that we are targeting a low that has failed to take out the high, means this is a very much weak low and this is a very strong high. So probably the high time frame liquidity pool will not be taken because in medium time frame this has proved that it's a very strong high. So, and there is no news today, which means most probably this would be the high of the day. So, if the price comes up, if I'm able to place my stop loss above, which is a high probability trade, and definitely it's going to be a winner or a break even. So, what are the risk factors? There is an opposing demand. This demand would fail, but still it's a demand, and I must I must include this in the risk factors. And yeah, there is not enough support from the high time frame. There is a partial high time frame support. So just what it is, I'm just going to place a trade. And one more thing is the lead, H1 lead, is very much far away from, from the price action, and it's very deep. So if the price comes all the way up here, I would be very glad to place the shorts, but most probably it will not come. Probably price can just take out this, mitigate this supply, which is a low time frame supply, and then it can push down. That would happen most probably. But if it happens, then this would be a high probability trade. Let's see whether it happens or not. That's that's in EOD. You know that it's not going to happen because they already mentioned in the starting of the analysis that there is no trades on this day. So yeah, my target one has been taken out, and price didn't pull back to take out the lid, and it didn't even come to mitigate this low time frame supply. So you can see the bearish momentum and the force in which the price is moving down to take out the weak swing low. That's why the first leg of phase A, it's always very short. The pullbacks are very short. And you must not wait for deeper pullback. So yeah, it is what it is, and that's a good trade. But that's a clean one. But I didn't get there is no tax, so I didn't get any trades on this day. So it is what it is. So we may get another phase A, and during which I must capitalize on this one. So let's jump into GU, and in GU the same. There is no trades on this day, and let's see what went well and why I didn't get any trades on this day. So the swing structure is bullish, the internal is also bullish, and I can't say that the fractal is bearish because there is no chalk here. So I can't say that the fractal is bearish. So there is nothing to describe in this one other than price indicated the daily demand, and this bearish momentum has now made a low resistance buy side liquidity which can be swift today probably. This also indicates that the demand is the supply is getting weakened, but I can also say this could be a slight pause in the price action before the price continues to be bearish again. So I'm not going to judge anything from the daily. I'm just going to jump into the medium time frames and let the medium time frames say narrate the story. This is a bit zoomed in version for your reference. Yeah, for long I need to see the price chop bullish, but because I can't play longs against this bearish order flow against the falling knife, I must see sufficient confirmations from the high time frames before taking long. So currently I'm interested in shorts following the bearish structural order flow. So as simple as that. So coming to 4 hour chart, the 4 hour the swing structure is bullish, the internal is bearish. So what can I expect? Price has mitigated the 4 hour demand and the internal is still bearish. So I can expect the price to push up to make a bullish eyeballs to start the run leg. But I can just play the price action and not expect it. So if I zoom in, I can say that I can see that the price is consolidating between this candle and all the other candles or inside bar candle. But here if you zoom in, you can see that this candle sell side liquidity has been swept, which means this candle buy side liquidity would be the target today. So if the price sweeps this buy side liquidity, price will come down to take out the sell side liquidity. Why? Because price is ranging between this news candle. This is the news candle that the price is ranging with. So price will take both buy side and sell side liquidity until and unless someone, the supply or demand, takes control and changes the market direction. So until then, we can look for quick scalps from buy side to sell side liquidity. So jumping into the H1, the swing structure is bearish, the internal is bearish. If I move close with this one, if I zoom in, you'll get this one. So that is the immediate price action that I'm going to target because I'm just going to play the 4 to 5 candles per day. So why should I focus on the big? I can take the story from the big picture, but I must focus on the immediate price action. So that's the point. So this is the internal structure that I'm going to deal with, and this is a strong internal high, weak internal low, and there is a ton and ton of sell side liquidity below because we already discussed about this 4 hour sell side liquidity. Apart from this, we are having this low resistance liquidity and this low resistance liquidity ports, and this is also Asian low, and this is New York low, and this is also previous week's low. So there are a lot of liquidity pools that can be targeted today if price tags me in. So immediately at 11:03 we can look for the phase A2, the price reacting off from high time frame POI. Sorry, not reacting, but the price is reacting. So I can't tick this box. It is in line with the medium time frame order flow, and the POI had satisfied the 4 out of 8 criteria. Actually, it satisfied 6 out of 8 criteria, so this box is ticked. And high time frame, yeah, it's supporting the medium time frame partially. What are the other confluences? It's up the Asian eyes, supply chain being respected, and it has flipped an order loss, and there is no opposing supply and demand zone. And there is a time-based liquidity to target. What time-based liquidity? The Asian lows and New York lows and previous week's low. And there is also low resistance liquidity to target, and there is a positive bearish divergence with CXY. All this adds to confidence that I can take this phase A2 trade in spite of the price being in the 4 hour demand. So that's why focusing on the immediate price action will always yield you trades. This is actually okay. I don't think. This is actually the Kisamti divergence that I was talking about. Just to give you an idea, I just took the screenshot. Screenshot. Then let me just quickly grab the screenshots for you. Yeah, there you go. This is another screenshot. I forgot to copy and paste. Okay, here you go. This is the final screenshot. Okay, zooming in, you know, again there is no tags because this was the POI and price went down. made a pullback and then pushed down. So I could have taken this as lift and then placed my stop order below right here and stop loss above. So then I saw that the stop loss was about 17 pips stop loss, so which is against my trading plan. I can just maximum I can have 12 pips, 7 to 12. That's my buffer. So I can't have more than 12 pips because it does not give me the risk to reward. So, and I don't know where the price will reverse. If the price reverses before, I can't manage my trades also. So, and one more thing is that if the price comes down, takes the Asian lows, if there is no buy side liquidity formed or engineered right here, price will definitely take out the buy side liquidity above taking my stops. So I can't expect the price to engineer the buy side liquidity and then continue moving down. It's not, a good idea. Rather, I just keep this trade, and I just wait for some more perfect opportunity, which gives me perfect risk to reward. So it has happened in the past and it will happen in the future. All it must do is be patient and wait for that perfect opportunity. So until then, stay patient and protect your capital. So that's it from the today's recap. So there is to give you a summary. There is no trades on both EU as well as DU because there was no tax, but the analysis was good and price just took the liquidity pool that I mentioned in the pre-session analysis. So yeah, see you tomorrow, guys, on October 15, 2024. Until then, yes, guys, bye.